Welcome to Morgan's Edward Street Weekly Wrap for the week ending 19th of October. Another volatile week after last week's 1,300-point plunge in the Dow. So far this week, the Dow has had a 580-point trading range and currently sits at a modest gain of around 50 points. Our market has been on a similar roller coaster, with weakness in Friday's trading looks to erase any of this week's gains. On Wednesday, the minutes of the Fed's September meeting were released and indicated that policymakers are forging ahead with increases and could hike rates again early as December as expected. Tightening policy comes as no surprise, but it does elevate concerns about increasing borrowing costs and the impact that could have on equity prices. Last week's downdraft in stocks has been attributed partly to a jump in yields of US government bonds, which can also undercut appetite for stocks compared against so-called risk-free treasuries. Rate hikes are expected to drive yields higher still. The Fed Reserve, in its summary of economic projections released in September 2018, says that it expects that the Fed funds rate for the business cycle to peak at 3.4% sometime in 2020. What does this mean for bond yields? Well, we observe that right now US Treasury yields are 4 basis points higher than the Fed funds rate. By 2020, that would take the US 90-day Treasury yields to 3.4%, plus 4 basis points to 3.44%. When we add this average long-term yield curve of 1.19% to this, we get US 10-year bond yields at the end of the business cycle hitting 5.35%. The implications of this are dramatic. As of today, the US 10-year bond yield is trading at 3.18%. By our calculations, this bond yield will rise to 2.53% by the end of this business cycle to 5.71%. We'd expect Australian 10-year bond yields to rise by a similar amount. Please note that the comments in this video are general in nature, and please speak to your Edward Street advisor if you wish to know if any of the stock recommendations suit your personal needs and objectives. I'll now pass over to Matt for his buy review of the week. Matt?
Yeah, thanks, Brad. Pretty tricky on those bond yields. Today's stock I'd like to talk about is Sundance Energy, and its stock code is SEA. Sundance is not everyone's cup of tea, given it's a penny darling stock trading below 10 cents, and should be only included in portfolios that are happy to take on a little bit of risk. Recently, Eric McCready, the CEO of Sundance, presented to the Morgan's conference, and I found it to be one of the better presentations I've listened to in some time. So who is Sundance Energy and what do they do? Well, Sundance Energy is a US onshore oil and gas company focused on the acquisition and development of large oil and gas wells, predominantly in the Eagle Ford Shale situated in Texas. Sundance's initial production from their recent 7 wells are indicative of their ability to execute on their ambitious development plan, which could see them become Australia's largest independent oil producer. Sundance are currently producing 15,000 barrels of oil per day, which is likely to see them cash flow positive in the first half of 2019, which will really put them on investors' radar, as not many peers on our market can boast such a record. Eric mentioned that a material positive for Sundance was the easing of cost pressures in the shale industry, with infrastructure constraints in the Permian Basin increasing the amount of frac crews in the Eagle Ford, and also commanding a premium for their oil output. Sundance recent acquisition of acreage from Pioneer Natural Resources, which has enabled them to move up to a quality oil and gas play with a market cap above $500 million, and according to Morgan's research, has a lot more in the tank in terms of its share price, with our lofty 21-cent price target against the current price of around 9 cents. So put Sundance Energy, code SEA, on your watch list and talk to your advisor as to whether they suit your risk profile and portfolio. Thanks, Brad.
Thanks, Matt. Next week, Bank of Queensland goes ex-dividend, 38 cents fully franked on Wednesday, and on Friday, Lou Solomon's vehicle Premium Investments goes ex-dividend, 33 cents fully franked. Well, that's it for another wrap. Please feel free to share this video with your colleagues and friends, and make sure you like the Morgan's Edward Street Stockbroking Facebook page. Also subscribe to the YouTube channel below. Have a great weekend.